Ji, to this virtual platform of HR College, one of a very senior team of HR College, I must say. That is the postgraduate students of HR College, which is MCOM committee. The first year of their committee, and I am proud to say that they have jumped from the ordinary sessions to such master classes, and today is their second session, and they have already got stalwarts like Sanjiv ji, who have joined us today from IIFL, and many more achievements, and to discuss investment secrets. And I could not say no to them. I always call our students our brand ambassadors. And as I call them as seniors, because these are our postgraduate students, believe me, when they had their first master class, the interaction that they had with their speaker, the only feedback we got was such a matured batch that has joined in and is asking serious questions. I must give credit to the entire core committee of MCOM committee, and headed by two professors and mentors, Professor Jasbir and Professor Dharti. I think this is one of the kind of the committee that has come up in HR College, which is doing master classes. We had been doing sessions, webinars, workshops, activities, intercollegiate events, but a master class with industry stalwarts is one of the kind that is being done in HR College. And Sanjeev ji, I must tell you, they are also planning a career carnival in the month of January. So a time when students do post-graduation would have been easily accepting their work profile, quietly sit at home and do their jobs and finish their MCOM degree, nothing great about it. But I think these students have come together to explore more and more opportunities in the field of commerce and business and education, and have been connecting to you through LinkedIn, through WhatsApp, and through various messages. I'm very happy. And if you can tag them onto the Instagram, they have become more active than even the principal of the college, which is so good. And I can see that vibrant MCOM committee. I'll call them as seniors because they have already crossed the graduation level and now they are getting into post-graduation. Immediately after this, they get into their jobs. So these are the serious lot which are coming in interaction with industry. And I'm looking forward to a session which is masterclass. I should not say session, but a masterclass from the stalwart in the industry on investment secrets by Mr. Sanjeev. And Sanjeev ji, though this is online, but we would always love to have you offline, physically in college, so that you can interact with these intelligent lot. We always get higher percentages in HR College, one of the best college in South Mumbai. And I'm proud to say that this is first initiative of MCOM committee. And thank you for blessing these kids and joining us and sharing your expertise and knowledge with these young budding brand ambassadors of HR College. So welcoming once again to this virtual platform, hoping that you will come to HR College even in a physical mode and interact with these kids. And first, and hearty congratulations to entire MCOM committee of brand ambassadors who have taken up this lead. Hearty congratulations to two professors, Dr. Jasbir and Professor Dharti, and the entire core team. I hand over to the students to take these proceedings forward. Hearty welcome to Sanjeev ji once again. Hearty welcome.
Thank you, ma'am. Thank you for your kind words. Sir, I would like to introduce our ma'am to you. She is Dean of Commerce. We have newly formed HSNC University with HR as the lead college, and ma'am is the leader of the lead college. So I can say that, and it's under her leadership that we are being able to achieve so much. And the university has been successful from its first year of transformation. In the pandemic 2021, it was the first year of the university, and it was the ma'am's leadership who could make it a grand success. And believe me, with the conversion of the affiliation from the Mumbai University, which is the prestigious University of Maharashtra, to the new university, we didn't miss on the admissions, but our the demand of the college is the same, and it's much more than what we had before. So it is under her leadership that we are able to reach over there. Now I will hand over to the students who is going to introduce the guest of the day.
Yeah, thank you, ma'am. Today we have an amazing personality as a guest speaker who don't need any introduction, Mr. Sanjiv Bhasin. Good evening, sir. My name is Puru Khwar. On behalf of HR College and MCOM committee, welcomes you. Sanjiv Bhasin has been with IFL since 2015 and is presently director of IFL Securities Limited. He has over 30 years of experience in almost all domains of capital market, which includes merchant banking, investment banking, brokering, fund management, and so on. Previously, he was running the prop book for the Deutsche Bank at Hong Kong for 5 years. He has worked with as a consultant on equity market at NDTV Profit for over 4 years. He is well known for the presence coverage in the market on all the TV channels, namely CNBC Awas, Z Business, ET Money, and Bloomberg Quint. He is a commerce graduate from SRCC Delhi. He always try to interact with the retail consumers and the corporates. He's the best person out there who will find the best opportunity in the stock market, even when the market is negative, and such confident personality like him is a really backbone for the retailers over the street. Yeah, till then, guys, Sanjeev sir will interact. You can post your queries over the chat. Yes, Sanjeev sir.
Yeah, good evening and thank you all. And it's great to be online with you. Thank you, Professor Ramchandani and Dr. Kaur. It's a pleasure. I was actually in Bombay. I thought we would make it, offline, but we'll do it next time. And you won't believe I've been at it since 6:30 in the morning. I went to Siddhi Vinayak and I've been on the shows because everyone was bearish till yesterday and we had a brilliant rally. But it's great to be back in the university. I was in SRCC and, those were the days. Sri Ram College also was a very, very big benchmark as far as commerce goes. It still is. And that has been, the cornerstone of how you form yourself. Now, markets are all about capital markets. It's an opportunity. It's a business. It's a profession. And it's the best time in your lives. You could not have asked for a better India. And, we'll give you a small presentation, then we'll take question. But did I ever think in 33 years that $33 billion got sold and the entire got absorbed by the, retail focus? So we all know that there are four asset classes, namely gold and silver, real estate as in your home, fixed income and equity. Now, gold and silver is emotional. What comes in never goes out. And that is the backbone of all our wealth, because we know that our, mothers, wives, sisters, daughters are like Lakshmi, and they have been able to protect gold. And that's why you've seen 50,000. If it was in the men's hand, they would have sold gold at 5,000. But the women will not part with gold. They will part with you, but not with gold. That's the emotion. That's why you've seen 50,000. So staying with an asset class is not easy. But believe me, if you stay with an asset class like equity, then you will realize how wealth is created. And not only that, right now you are, the smartest kids around, or the smartest ladies and gents, and will be. And your ma'am yourself is saying how much of dedication you have. But as a business or as a profession, the capital markets are in the best shape ever. Now you can imagine what it is like in the last 2 years when the demat accounts from 3 have reached 11, and out in a population of 135 crore, can you believe just 11 crore demat accounts? So you can see we've just hit the tip of the iceberg. Now, demat accounts itself don't form. It is how you manage wealth and what is your intermediary role. You could be an asset manager. You could be, you could be a fund manager. You could be a broker. You could be an advisor. You could be a portfolio manager. You could be a banker. Anything to do with finance. But equity has to be the mainstay because it's corporate lending, retail, and so on. Now we'll take this small slide and then we'll take some, opportunities. So what have I termed this? Now I have been bullish, as you know, I am called the market guru and I've been bullish by nature because bullishness comes from positivity. If you're positive, only then you should be in equity. Otherwise, you will always have walls of worry. Walls of worry are not formed by you, me, it's the global scenario. And the strong dollar is creating havoc everywhere. So we've written global capitulation gives local opportunity by the fear. By the way, I put this slide out in early April, May when there was chaos. And for the last 6 months, I've been traveling across the length and breadth of the country. You see, our business is such that on weekends, retailers interact with me and they are inspired and they get, I am a positive person, so I can, and that's what we get business, more AUM or asset under management. So start the next slide and we'll go with that. Now, inflation may have peaked in the US at 8.5, in India at 7.7, we are down to 7. Oversold markets in US due to ETF selling pressure. Forex, foreigners have sold aggressively in India because China has been in a huge slowdown and Russia was almost untouchable. You could not take out your money. Manufacturing PLI shift from China is doing extremely well in India. See, for the first time, we've realized that manufacturing, that is the likes of ABB, Siemens, Thermax, these stocks are hitting all-time highs. These are capital intensive or capital creators. And we realize that manufacturing base from China and Euro 1 are now going to be in focus. So everything to do with increasing capacity as far as CapEx goes is going to be in India. And that is why these stocks are, giving you the harbinger that India is headed for very, very good times. Unexpected RBI hike in CRR is already been priced in. Crude demand and is getting settled. And you've seen that from the heydays of 130, which was there close to the starting of the Ukraine crisis, we are down now to $85. GST tax collections were at a record high. And that means that in the Indian context, our demographics are at a premium and they are playing out brilliantly. Consumption, air travel, hotels, everything to do with reopening is playing brilliantly. Next. Now, what is investing? It's all about allocating money towards assets in the hope of making your future and to earn inflation beating return. Now, what has been the elephant in the room? The elephant in the room is that inflation is hitting 40-year highs in UK and in Europe and US, and all due to Europe being the elephant in the room, being dependent on Russia in oil, energy, and which is evident that nobody ever has imagined how dependent Europe is and what will be the impact if there is such a conflict. The US, on the other hand, saw huge impact of wage inflation, which has caused inflation to hit the high of 9.1. And the Fed is lost credibility. Last year, they kept printing money when they didn't realize inflation was not transitory. And if they had stepped on the pedal and gradually started to raise rates last year, we would have not come to this calamity. Now the Fed has only one tool, and that is to raise rates. In all this mayhem, you've seen the dollar hit all-time highs, the rupee is at 82, even though the rupee has been a relative outperformer against a basket of currencies. But the euro and the UK pound are getting decimated. Next. So like I said, what are the 4 avenues you have to make money? Gold, direct equity, mutual fund, fixed deposit, and real estate. Fixed deposit gives you fixed return, as in it is a relative secure, but 6, 7%, 8%, and with taxes it works out to 6%, which means you cannot beat inflation. Real estate, you'll be in 1 generation to make 1 house will mean a lot for you, because the cost of land has been escalating over the years and land is limited by space. we told you that gold is a no-brainer in the sense that what comes in never goes out, so it's emotional. And fourth, you are left with mutual funds or direct equity, which means that even 1,000 rupees SIP will make you owner of a asset called equity. And 1,000 rupees, you cannot buy one ticket and popcorn for a show at the PVR or whatever. So it means that small amount of investing at a young age can create financial freedom for you people by the age of 50. And there is no other asset class where small amounts of money can be invested. Next. Now, anything to do with risk reward will have high and low variance. So, you know, the PPF, the EPF, the pension fund are moderately low risk, but their ability to beat inflation is limited, as you've seen in the present crisis. On the other hand, equity has a high risk, high reward, depending on your gestation period. So if age is on your side, you cannot but be in equity because you have 30 years or 25 years to invest, and that is how wealth is created. To give you an example, if you invested in Infosys in 1993, I hope all of you have heard of Infosys. Infosys came out with an IPO in 1993 at 93 rupees. So if you bought 100 Infosys, you invested something like 9,300. That is, say, rounded off 10,000 rupees. Now 10,000 rupees in 93 was much more than what it was today, but still it was affordable. Now, can you take a rough guess what it is worth today? That is 29 years of investing in Infosys. 10,000 is how much today? You know, take a rough guess, maybe 1 lakh, 5 lakh, 10 lakh. So if I gave you a figure, it will be 4.25 crores, which tells you that just 10,000 rupees had the power of compounding to become 4.25 crores in 29 years, just 10,000 rupees. And believe me, the issue of Infosys was not fully subscribed. You could have subscribed to 1 lakh or 10 lakh shares and got subscription. But that was why, because IT was not well known and outsourcing was hardly considered anything. But look at the beauty. IT and outsourcing took the center stage. They increased our reserves, and they are the best hedge against a weak rupee. So it tells you that even small amount of investing can generate huge alpha if you stick with the leaders and stay with the winners. The problem is, could you stay with Infosys till it became 4 crore, or you lost out at 10 lakh, 15 lakh and got into a Suzlon or a JP? So staying with quality, staying with brands is the mantra. And I have made so many mistakes that I lost all my hair. Only now I have become wiser. On a lighter note, so wealth only comes if you stay put with the leaders or with where you have conviction. Next. So you've seen almost 14 million demat accounts being created, CDSL. You saw the likes of Zomato, Paytm, Fino Payment. All these became a 1 lakh crore market cap. How many of you, I don't know, applied in these stocks, but there was a flavor of the day, flavor of the month, flavor of the year, and an 18,500 everyone was chasing. So greed and fear is what dominates markets, but it tells you that the real coming of India is the new millennials. You guys are the ones who are going to drive. So you are ready to take that risk and become entrepreneurs because you have a fancy that startups or seed capital through venture caps is going to be very, very easily available if you have the right ideas. And investing is all about risk and reward. Now, Zomato or a Paytm over a period of time will definitely do well. But right now, the losses and the gross net values are going to be a difficult pill to swallow unless you are a real long-term investor. So the problem was that in the lure of greed, everyone subscribes to things which thinking that money will be made overnight. There are no free lunches. There is always greed and fear which resides in you. And if you can control your emotions, you will be a balanced investor. Now, because of these record items, you saw oil and bond yields spurt, and FIs almost constantly have been selling for the last 2 years as they felt Indian markets were more expensive and they were putting in money in China And now the latest crisis of not being able to repatriate through Russia meant that India was the best available place to sell and raise liquidity. Also, the dollar strengthening means money will go into fixed income. Next. So if you're not following the stock market, you're missing some opportunity of creating long-term wealth. In every fall, there is greed and fear, but all declines in Indian context are buying opportunities. We've seen that for many, many years. And for once, I think the Indian economy on its own is showing you huge amount of outperformance against any and everybody, whether it's developed markets or emerging markets, or our neighbors. The problem in Sri Lanka, Pakistan. China has not been able to deal with COVID one, and their real estate bubble is bursting. So is the problem with Korea. So is the problem with Taiwan. The only safe haven is India. Now take it with a pinch of salt. I am a patriot Indian and I am an Indian bull. And I think that Indian markets are poised to hit new highs faster than we thought. Yes, the problem on yields and rising inflation is a concern, and the strength in the dollar. But that is all transitory. We think sooner rather than later, you should see the dollar topping off, yields starting to decline as inflation starts to moderate, because you've seen almost a 40% correction in commodities. And I think that the supply chain disruption may soon end as more jobs come on the market. Next. So as you see, mid caps are the story which has made a huge return in the last 2 years. We all know what COVID did. We hit a low of 7,800 and people came and said and predicted that this will be the end of the world. If you all saw me, I've been one of the few bullish people from 8,000 levels and where we reached now. And I thought that COVID was the only opportunity ever to make money, because nobody had anecdotal evidence of what a pandemic was, what were the after effects. But if you survived, which by the grace of God we all did, then look at the wealth which has been created. So markets are all about greed and fear, and controlling the emotions is what makes a smart investor. Now, all of us cannot be Warren Buffett or a Junjunwala ji. We all are, moderate enough in beating our long-term goals by creating wealth, because age is on your side. So for you, 100% into equity should be the mantra, through SIPs or mutual funds, or unless you have enough exposure on numbers to see direct equity. Next. So you've seen that most of the positive sectors, which meant that IT, which was most touted to be the outperformer in January, has down 40%, all to do with the extent that if there is a recession in US, then large companies outsourcing budgets will fall. And IT has been taken a backseat in the last 4 months. So you can see how fast trends change, and telecom and banks, which were the worst hit, have come back very, very strongly. Now, yields rising means banks franchise on the liability side does extremely well. And with credit expanding at the way it is, if you went to airports, you saw there is a 2-year waiting in certain automobiles. There is a demand for hotels like never before, wedding season, festive season. So our own demographics means that India is a self-sufficient place for consumption. Yes, there is the risk of overseas, but it got mitigated with IT's underperformance despite rupee hitting an all-time low. So sectoral changes are very, very clear, but we have to be adept to that, and over a period of time, experience and learning will make you aware of all the nuances in the markets. Next. So economic indicators are all pointing that India is in a very sweet spot. Now, I'm not saying this because I've been bullish, but I'm telling you, if you read the fine print, you will see our inflation, our monetary policy, the RBI language, the RBI government statement, the board, they are all pointing that India is poised to take off, whereas others are poised to, beat the blues with this some period of recession. Now, all this is a changing environment. We know that growth momentum in emerging markets is much stronger. but they have to deal with a lot of debt because they have to raise capital and so on and so forth. But right now, what is happening is that due to the currency and the strength of the dollar, everything is getting eye-washed in that. Now, all these are temporary or transitory. We also know that Putin has mostly landlocked Ukraine, and if he's got no threat from the West, sooner rather than later, peace can appear. And that would mean the rebuilding of Ukraine and a lot of other things on supply chain, which can get solved. Now, if you are a positive thinker, you will use these opportunities to create portfolios of good investment stocks or brands which have lasted, a lot of these problems over the years. And then when industry starts to pick up, you can see the return coming much, much stronger. Next. Sectors which are outperforming, we've seen pharma do the very, very best when COVID and the likes were there. And you were, what were you doing? You were staying at home and only spending on RT-PCR tests or the medicines to get you through. And fear was the dominant factor. IT did well because work from home was very, very strong, and FMCG was able to raise prices. Consumer staples, PSU banks, and media stocks have been extremely strong because the advent of staying home and work from home meant that your dependence and your eyeballs was seeing more of me or other analysts, and that was helping you create wealth. Next. See, these have been my stock commandments for the year. They've done relatively well. ITC was a very frustrating stock for 2-3 years, but I held my ground. Today, in a falling market, where the market has corrected, ITC is at all-time highs. ICICI Bank has become one of the best banks in the private space. Ultrasem is the largest cement player with 115 million ton capacity. IRB Infra is a cross play on the road monetization. It owns 22,000 kilometers. And you know that FASTag is compulsory and domestic travel is very, very strong. DLF is a play on the real estate side, which is budding, where commercial and residential prices are hitting all-time highs. L&T is a play on the infrastructure, the industrialization on hydrocarbon and electricity. And SW Solar is a solar play on panels taken over by Reliance. HCL Tech is a reasonable play on the IT front, where valuations are almost half of TCS and Infosys. Godrej Consumer and Bosch would be the last two picks, where we think that Godrej Consumers, franchise and portfolio is doing extremely well. And Bosch is a pivot to the semiconductor and an OEM market where autos are ruling the roost. Next. So keep the faith. When times are down, it is very easy to be swayed by emotions. But just like falling in love is an emotion where you don't let your head rule your heart, same is the case with equities. You have to go through the moments and you have to go through the pain. There is no gain without pain. But staying invested is the only way that you will create wealth. And hence, your whole focus today as youngsters who are just going to become entrepreneurs or professionals or part of the economic system, first thing goes that start putting your own SIPs, start doing your household people's money. If you are smart enough, manage assets, and then let the growing grow. But for the next 30 years, all you have to do is put all your savings into equities. And believe me, through my experience, I can tell you no other asset class can grow like this. I have been corrected in the last 2 years by the grace of God, and hopefully you guys will also reap the benefits of that. We'll now go with a few details which I'll share, but I would like more interactive action, and I can answer and put at rest all of your queries, hopefully with the, over the next half an hour. So thank you very much for calling me. It's always great to be with youngsters like you. They energize you, and they also tell you that India is in very safe hands as far as our future goes. So stay invested. Make this a career point, take the fine prints, but remember, handling money is going to be the mantra which you have to manage. Whether you are in business, whether you are in doing a job, or you are professionals, handling portfolios, handling money is what the real mantra in a country like India is, where the demographic premium now is matching anything in the globe, where we've seen that we are living in tough times. So thank you very much, and I'll leave the floor open for question answers.
Good evening, everyone. This is Sadaf Chaudhary from TYBcom. I thank Mr. Sanjiv Bhasin for such an informative session. I'm sure this webinar has added immense value to all of us. So let's start with the Q&A for the evening. So the first question, sir, is in the case of budding professionals or interns on stipends, how should they bifurcate their income between investment and savings?
So good point, but you try and curtail your savings and put that into investment. And believe me, through my advice, what I tell you, that start doing SIPs in good mutual funds. Why a mutual fund? Because you are going to be busy in making your career, and you don't have time to focus on individual stocks or sectors. The fund manager is paid to do that job, and he will be able to bifurcate the leaves from the trees and easily look for sector stocks which will create wealth. That's his job. So handling it to a professional who can manage equity is good. But for you at the young ages, if you start putting all your spare money into equity, believe me, in the next 20-25 years, you'll have enough capital to become financially independent by the age of 45 to 50, which means you can go and watch a movie in the afternoon, you can go to the club in the evening, play golf, and you're bindas. You have nobody to answer.
Thank you, sir.
Hello, sir. It's pleasure to connect with you. I am Ekta Hinduja from SY Bank. I would like to know what is an ideal investment for someone who is there in 20s in order to have a well-secure retirement fund by the time he or she is 50 years old?
So it depends firstly on the capital you want to put. Like I said, as you progress in life, you will get a stable job, but try and put all the savings which you have or the spare income into equity. I repeat the word spare income, which means don't get lured by trading till you understand the nuances, and don't take risk beyond a point, which means don't borrow money to put into stocks. The idea is whatever my spare capital is, let it go into good blue chips, let it go into mutual funds, and the SIP is the best way of creating wealth. If you do systematic investment planning for the next 20 years, believe me, by the age of 45 to 50, you can retire.
So it's very important to be systematic. Thank you for your advice.
Hello, sir. My name is Jiva. I just wanted to ask, the prices of Adani stocks are a little bit on the higher side. So are these prices justified, or is it just a big bubble?
Well, you must be the millionth person on earth who's asking this. And everyone loves to hate the Adanis and the Ambanis, because they'll put the relationship ke Gujarati hai or Modi ji ke hai. And believe me, in the last 3 years, the Adanis have created more wealth than any group. Now, all this stems from a lot of fact that the multiples given to stocks are high, the leverage on the balance sheet. But believe me, they are in all monopoly businesses. You cannot have a dream which does not think big. Why is Mukesh Ambani where he is? Because he can think of 130 crore people. He thinks of products which will beat them. Same is the vision of Adani. Now, it's a debatable point that sometimes price multiples are not key. I'll give you a small example. Nestle 20 years back also used to be at 35-40 times price earning against other FMCG stocks which were 1/3 or 1/4. And the stock was, close to 2,000 rupees. Today, Nestle is 20,000 and it still quotes at 60 times. Brands are not created overnight. I'll give you a small example. I joined the market in 1988. And that time there was an outcry system. So I came a first class graduate from SRCC. I was doing my TCA intern and I went on the floor and I had to shout to, understand what the market is. So my father's one friend was there. He could not speak Hindi or English. He could speak Punjabi. I don't know if any of you understand Punjabi, but I'll speak and I hope I'll give you the meaning. So I asked him what stock to buy. I said, "Kaun sa share liya jaye, uncle?" So he said, "Kaka, पौंड का शेयर ले लें, 16 साल दी जवान ते 78 साल दी बुजुर्ग रोज सवेरे शाम लाएगी, कदी out of fashion नहीं जाएगा." Meaning, he said, buy the share of pond that if she's a 16-year-old or a 78-year-old lady, she will use ponds morning and evening. This will never go out of fashion Believe me, bonds was 50 rupees at that time and an expensive stock. It got merged with lever after 5 years. Today's worth 55,000. And you all still use bonds. At least I use bonds. So you can imagine what personal care is. The promoter of Page Industry came to Deutsche Bank in New York to my boss in 2007, and he placed, my boss took the review from me, and I said it's a must-have. We put in $1 million. We were a hedge fund at 750. Little knowing that Page Industry makes, jockey underwear. Now, could you believe what it is? That 750 in less than 2 years became 1950, and we were laughing our way to the bank as a hedge fund, only to see it hit 55,000 today. And you can imagine what brands are. So that tells you that don't measure Adani Group or the Amani Group with the next 6 months or 2 years. Think of the next 10 years. They belong to them. Whether it's power, whether it's energy, whether it's ports, whether it's coal mines in Australia, whether it's green, whether it's Adani Wilmar, there is a huge franchise. Yes, there is debt on the books, but like I said, it's a difficult pill to swallow because of the sheer weight of the market cap.
Thank you, sir.
Good evening, sir. Riya Gidwani from FYMCom. I wanted to ask you, can we take an equity swing trade just based on fundamental analysis in today's time? Or is it important to have knowledge and understanding of technical analysis before taking swings?
So very good point. See, technical analysis is a full science, and people who follow support and resistances, they don't believe in any fundamentals. If supports are broken, they are out of the trade, and if resistances are broken, they are on the upside. For them, the paradigm is not to lose money and make less money, but not to lose money. So emotions are out of the way when you trade on technicals. What happens is, when you trade with the emotions, you are not able to book a loss because that's your ego. It's not you, it's anybody. He cannot book a loss. Whereas a technical analyst or a chartist has to book a loss because it's against his fundamentals. If a stock breaks below his support, he has to be out. There is no question answer. However, for you to take a swing trade means that you must be clear in your perspective of what is your loss taking capacity. And since you are a youngster, I don't say trading is a bad word. If you know the nuances and you are able to hedge yourself, or you know your discipline, being disciplined is very necessary if you are taking a leverage trade. So discipline, having knowledge of the nuances, and being ready to accept what you can take as a loss means the stock market teaches you one thing: no egos. That is the only way you survive. Or the technical chartist, like he has his parameters made on averages and the support and resistance.
Thank you, sir.
This is Sadaf again. So please help us with your thoughts about investing in futures and options and cryptocurrencies.
Well, crypto is not my cup of tea at 59, and I don't want to live with a swing of 50%. But like I said, crypto is there, and people who invested in the last 2 years on the wall of liquidity made a lot of money. There is the case for an alternative currency. It has to be well held, but there is a lot amount of risk because the volatility is very high. Volatility swings come from greed and fear. Remember, greed is 1, but fear is 4. You will fear makes 4 times more money than greed. When the markets fall and collapse because of a chaos, there is no question. So you have to be very, very adept. Now, future and options are, like I said, a derivative segment where the only underlying asset is cash. So if you are able to put up the capital, you must be prepared that I must have a limit on my loss. I must know how to hedge myself, and I must be able to survive the next day. There is no emotion over there. However, people get lost in the humdrum of a bull and bear market and often tend to overtrade, which is where you have to be careful. So my mantra for you is, trading is not bad, but until you learn all the disciplines, it's not easy. At your age, where your emotions are more tantamount, it is not easy to be a trader unless you are very, very disciplined.
Thank you so much, sir.
Sir, I would like to ask, what would be a wise time to redeem one's investment?
There is no wise time. There is a saying that I'll try and time the market and so on. Those guys are fools. The only adage which works is staying invested. How much time do you spend in the market? When your grandmother or mother bought gold, the price of gold remained below 5,000 for years, generations. But you've hit 50,000 only because you didn't part with it. Now, it doesn't mean that you were one fine day, because you are emotional about it and you don't check the price of gold every day. Whereas in the stock market, you will check the price of the stock 20 times in a day if you own it. That aaj 10 rupees upar hai, aaj 10 rupees niche hai, it's up 1%, blame the management, blame the circumstances. It doesn't work. Put your surplus cash in a good mutual fund, let the fund manager manage it, give it time. If it has 10, 12, 15 years, only then will you see growth. What are the three things that you invest for 30 years? Tell me, any of you.
Maybe property.
Gold.
Gold.
Yeah, so gold is one because of your emotions, not your doing, my parents. Home because they built a chat for you or a house. What is the third thing you invest for 30 years? You will be at a loss. It is you. It is your parents' investment in you. See, today the cost of bringing up a child, his tuitions, his extra curricular activities is huge, humongous. Now, just because you didn't get 80 and you got 60, did your parents stop feeding you or stop giving you milk? No, they'll give you more badam, they'll give you more milk, they'll invest more in you because they are doing an investment with the hope that in 30 years or when you become 30, you will be well settled, you'll be, they're not asking something in return. So that investment is like stocks. Let the children rise, let the stocks grow. You cannot expect Reliance on a market cap of 20 lakhs to suddenly become 30 lakhs. It will take time, but it's got a business model. It's got everything going for it. It needs gestation. It needs time. So think of that as an investment, and then only you will see that how 20 years of investing can create a lot of wealth.
So we have a question from the chat box. I know you're a patriot, but still the question says, there's a recession in the US right now. So do you think it is going to affect India in 2023? And what is your advice about investing regarding
Well,
that?
if I heard Mr. Chatwal of Indian Hotels, the Taj Group, he said India's best time in the hotel industry is going to be 2023. Now, we know there is always a wall of worry, and that is the recession and the talk of US, but it's expected to be a mild recession. President Joe Biden's popularity is at an all-time low. There is a midterm election consensus in the middle of November, and we think that the rate hike or the bullish, the hawkishness may be coming to an end. Now, all this means that you are getting an opportunity to get into an index which was at 16,700 a few days back, and which has the potential to go to new highs if things get better globally also, and locally we are seeing some of the best times. So I have no two ways that India is going to be one of the better insulated. It doesn't mean that we will not correct if globally there is a correction, but if the markets start to go up, we will outperform. Just as in yesterday, there was a lot of bearishness on the back of US fall, and lo and behold, today we are up. We had the best rally in the last maybe 2 months. So markets are all about greed and fear. You are right. There is a recession, and Europe is the elephant in the room. But these things may not last forever, and that's why a systematic plan of investing every month means you are not trying to time the market, but buy in good and bad times both.
Thank you, sir.
Sir, I have another question. Can you tell us what motivated you to become an equity consultant?
Well, I had it in my blood. My grandfather, my father, they all used to do broking, and I had no other dreams when I was in college. I was a very good. I used to play. I played for Delhi School, Delhi University in cricket. I used to play hockey, and my father used to burden me every day. There was no net that time, so he used to tell me to read 20 rates every day, 20 stock prices every day. At that time, the newspaper, and I wanted to see cricket and movies. Who wanted to see rates? But that became a habit. Today I can tell you 2,000 stocks rates offhand, not on my phone, but by memory, because I see rates every day. But I always had one dream, and that is to be in stocks. Now it's been a very, very tough and tiring career because these are very stressful times. Often there was the urge to do something as CEO, but I stuck with it. And by the grace of God, now I'm in, what I can tell you is it's passionate. So if you are in passion with something, you will always enjoy it. I had one dream only of being in stocks. I've been through a lot of hair loss and health and wealth, but that's part of the game. Relatively, I am a more learned and a well sought of person because I have a balanced view. And since you've seen these experiences, the highs and lows make you more wiser. So I'm wiser not on my positives, but from my negatives, I've learned a lot.
So one more question from the chat box. So how to maintain good psychology during live trading, like stability in your mind?
That's how you do a hedge trade. So if you are long Tata Steel, you sell SAIL. If you are long metals on a day when it's high beta, then sell pharma. And on days when there is metals are falling because of a stronger dollar, buy pharma and sell metals. But all this requires a lot of patience, a lot of perseverance, a lot of discipline. If you can do a hedge trade or pay trades, you will stay in the market because your mark to market, or by the end of the day, your losses should not escalate. So it's not easy. You have to learn these nuances. Like I said, trading is not so easy till you get maturity and you can accept things, because hurting your ego just now is difficult. The market doesn't hurt your ego. It will take away all the money from your pocket and then your ego will get shattered. So don't try something which is not going to be, conducive to your health and your mind, because loss of confidence sometimes can be very deterrent. So I would personally advise not to trade. Get a nuance, get into understand what the positives and negatives are. If you are able to balance it well, then there is no harm.
Yes, sir. This side, Guru, as the Diwali is coming in few days, so there will be Murat trading. So in which sector you are like very bullish till next Diwali?
So Puru, I am very, very bullish. I think Diwali should see at least 18,000 plus, if not more. And I think our Muhurat will be very, very positive. On stocks, I have given you a list of those 10 stocks. But since you asked for it, I will tell you I am very bullish on real estate. I am very bullish on capex. I am very bullish on cement, on autos. And I think that these are going to be very, very big outperformers. On stocks, like you asked, there is a list of 9 stocks which I've given, but I still think that there are enough other jewels in the crown where you can make money. So my top 9 picks just now are Ultratech, Indigo, Canfin Home, DLF, Jubilant Ingrevia, Tata Motor, Godrej Consumer, L&T and IRB Infra. I'll share this by mail to Mehak also, and we'll try and keep you updated since we are in touch now. Next, when I'm in Bombay, I will try and make a personal appearance to your college also and try and sort out your queries. So we'll take it as the last question, and I'll give you a lot of more color on how portfolios are looking and what you can do to make some quick money also. And that will enthuse you to stay invested and maybe participate more. But please, please open SIP in all your accounts in your family members' names and start even small amounts to create wealth over the next 20 years.
Thank you very much, sir. Guys, I think we have to stop with the Q&A. There's the chat box is just being flooded. He'll try to answer them later. But Mehak, could you please go ahead?
Am I audible?
Yes.
Thank you. On behalf of the MCOM committee, I would like to thank Mr. Sanjiv Bhasin for taking out his time from his busy schedule and sharing his expert curated investment tips. A special thank you to our torchbearers, Principal Dr. Pooja Ramchandani, Vice Principal Dr. Naveen Punjabi, Vice President Dr. Jaspreet Kaur Sodhi, and our very own mentor and teacher in charge of the MCOM committee, Professor Dharti Nirvan.
Okay, guys and girls, wish you all a very happy Navratri, Dussehra and upcoming Diwali. Good health, wealth and staying invested. By the way, I am very active on Twitter, so all of you send likes and stay in touch. It will increase your social media and mine also. It will give me a little bit of more energy to be youthful. But God bless and wish you all the best. Thank you very much.
Thank you, sir.
Thank you so
Thank
much,
you,
sir.
sir.
Everybody,
you, sir.
just a quick
Thank you, sir.
reminder. We have sent the feedback form in the chat box. Do fill the feedback form, and as he said, follow him on Twitter. Thank you for this amazing webinar. And that's it. That's the IMCOM committee signing off for today's session. Hope you guys have a great weekend.